Thanks, Peter, for that warm welcome. I wanted to touch on a few things. I've probably got a slideshow that's a little bit bigger than the time slot, but I'll try and move through it as quickly as I can. I wanted to, of course, talk about prices, which is on the lips of everyone at the moment, especially our wool growers out there, as to whether they're going to be sustained. I want to talk about the drivers, some of the drivers that we believe are pushing that, and then move back into the strategy of the company and the funding split of the company, and then finish off with, well, the bulk of the presentation will be about our marketing strategies. Just quickly, this gives you a picture back to July 1990 of where the Eastern Market Indicator has been, both in US dollar terms and Aussie dollar terms, and the exchange rates that have affected that. I suppose the interesting thing about the last little while is that it's defied all the odds. We had a global financial crisis at the end of 2008, and basically from March 2009, when we should have been really suffering, the wool market started to take off, and it took off not only in Aussie dollar terms, but against a competitive Aussie dollar and a deflating US dollar. So we moved to a point where we're at parity, of course, and we have an Eastern Market Indicator around 1292 cents, I think, Peter, it was last night. Yeah, something around that, which is, well, fantastic for our wool growers. They've had a terrible time of things in the last 10 to 15 years, and it's good to see them, you know, at these levels selling their wool. Of course, we don't want it to be like one of the previous trends. I suppose the last time it got up around these levels was back in the end of 2002, where it, of course, spiked and then fell back as quickly as it could. I will talk about the drivers. We think some of the things that are driving this are these four things: one on the supply side of the ledger, and three on the demand side of the ledger. And of course, we have about 68 million sheep at the moment. Just to give you an idea of what the picture looked like back in 1990, we had 180 million sheep. Let's go to 1991. We had the floor price that was withdrawn, the reserve price scheme that was withdrawn, 4.6 million bales in stock. And I did find a press release the other day from the Wool Corporation in 1991 talking about underwriting the cost to actually kill your sheep. Now, there's many things the wool industry's done or failed at in the last 20 years, but we haven't failed at that. We've quite successfully reduced the flock to the point where we're out now in terms of breeding ewes at critical levels. We do expect this year to be a tough year, and we expect the size of the clip to fall slightly, and the main reasons being we're having a terrible year with fly strike at the moment, and we'll see some significant losses there. And we're having a terrible year with worms. You know, of course, in a drought, when you're feeding your animals, you're almost like their own dietitian, so you're able to control their diet. In these wetter times, it's actually harder to keep an animal alive when your property's wet than it is dry. So on the supply side of things, there's no doubt it's affected the pricing or the Eastern Market Indicator. But the price or the supply is rather predictable, you might say. It's fallen at a steady rate for many years now, and it wasn't the Chinese that woke up on New Year's Day and said we're going to take this market up another 30% because supply's down by 3%. There had to be something else, and there are three other things that we believe are affecting this market. The first is that wool's very much back in fashion in the Northern Hemisphere. We're seeing a move back towards wearing suits, wearing vests with suits. Wool ties are back in as an indicator. We don't compete below the waist in the casual arena, which is a worry for us, and I'll talk about that a little bit later on. But we certainly know that wool is back in fashion. The second thing is we have a new consumer out there, a consumer called a LOHAS consumer, and LOHAS stands for Lifestyle of Health and Sustainability. and that's the clean, green consumer that wants to feel good at the cash register when they're checking out that they're doing something by the environment, and wool works rather well for that consumer. The third, and probably the most significant of these demand drivers, is Chinese affluence. China, there's three things that drive mass consumption of wool. You've got to have the population that suits, and certainly China's got that, always has. You've got to have the climate that suits, China's got that, and always has. But they haven't always had the affluence that suits, and that's the third driver, but they've got it now. Just to give you an idea, about 80% of our wool, 75 to 80% of our wool is now moving to China for processing. Of that 75 to 80%, 50% is now being domestically consumed there. Significant figures. I was at the Outdoor Retail Conference last week in Munich, and in halls C1 to 5, the Chinese are still there selling their wares, but they're not walking the aisles buying their wares. So that action, that outdoor skiing, hiking, fishing market is still something that they haven't got onto. So as they get more money, they'll start travelling, and that will be an important part for them. Stepping back a little bit, in Woolpoll 2009, we moved the needle slightly on the R&D. The wool growers voted for 70% post-farm and 30% on-farm. That equates to about 50-50 when you extrapolate it out. 50% of our expenditure must go into research and development, and 50% must go into marketing. We have a Woolpoll next year. They come around pretty quick. 2012 we'll have a Woolpoll. We have another review of performance next year. We have a one-year-on review of performance this year. These ratios, for the first time, have actually been written into our statutory funding agreement that we negotiated with the government in June last year. So in that document are these ratios, so we can't move away from them. Now, on the marketing side of the ledger, it's pretty easy to spend money, as you probably all know. You go out and book another page in Vogue. But on the R&D side, it's not as easy to find good projects and get them contracted and get those milestones hit and pay those bills. So for every dollar we spend in marketing, of course, we've got to spend, well, for every $10 we spend in marketing, we've got to match that on a 50-30-20 ratio in the other portfolios. Just when I took over as CEO, about this time last year, actually it was March 9th last year, we had no strategic plan. We had no, well, we did, but they were old. No strategic plan, no operating plan. We had a statutory funding agreement to renegotiate. We had a productivity commission. We had a one-year-on review of performance. We had to appoint a marketing agency. So there was a few things that we had to get busy at. The first one, of course, was the strat plan. And we were working off a strat plan that was written in 2007. So we thought we'd better rewrite that. A few things had changed. What I asked the team to do is go back to basics. Look at what we are and write a strategic plan according to that. We do marketing, we do research in the on-farm portfolio, and we do research in the post-farm portfolio. In the grey area here, we have international sales, which is Woolmark sales. We sell about $10 million in licensing, swing tags and licensing around the world each year. And the final one, market access, we included. What we wanted to do there is actually make sure that the wheels of the supply chain were oiled. But the other thing we put in there is we plan to launch 2 Woolmark stores, one in New York and one in London. We're working through that at the moment. That is subject to board approval, but they're quite keen on the proposition. They're keen on it not to make money out of selling apparel, but to franchise those businesses after we get those footprints down in those two markets. So that's a project that's in play now, and we expect that we will, all going well and all approvals being ticked off, we will have our first store down in London around November, December this year. I'm going to step on to marketing now, which is the biggest part of my presentation. Just to give you an idea, these are the revenue, expenditure against projects in the marketing portfolio and the operating costs. We're quite public with all that. There's nothing to be ashamed of there in terms of ratios, projects to operating costs. Of course, we aim to reduce those operating costs at all time, and we've taken in this fiscal year, it looks like we'll have a savings of $3 million on our operating costs on top of what we did last year. The board has also said to us, let's start projecting out a little bit further. Let's not try and balance the revenue ball on your nose with the expenditure, because often you find out, like a year like this, you get to January and you find out you've got more money than what you thought you had. And when you find out in January it's too difficult to spend in that fiscal year. The marketing side of the ledger, as I said, we'll spend that very quickly, but we've got to match that on the 50-30-20 ratio that the government or the wool growers set for us and is written in our statutory funding agreement. So they said, listen, project out a little bit further. Here's the budget you can have, and if your revenues fall through the value or the volume of wool, then we will dip into reserves and prop up those funds. So that's the operating costs and the project costs for the research portfolio out to 13-14. Just under that, 3 significant programs, 3 significant strategies in the marketing strategy, if you like. Now, that's not normal. If you're a normal commercial business, you'll have one strategy and you'll stick to it. If you're good, you'll stick to it and adhere to the rules of that strategy and not deviate from that as long as you can, providing you get the right one. We appease many, many different people down the supply chain, and we're trying to attach strategies to the demand drivers that I talked about up front, and they were fashion, the low-has consumer, the green consumer, and Chinese affluence. So it's not typical to have 3, but we have 3. The first one is the Prince of Wales program, the HRH program. Now, you know, I talked about the low-has, the clean green consumer before. This strategy is targeted at that consumer. And what we've done, and what we will do, is we'll revert to one brand, and that's the Woolmark logo. That's the best asset wool growers have. That's the best asset we have, physical or otherwise. And we will use that logo. We'll stylise that logo. We may colour that logo, and we'll use it as a marketing tool, not only inside a garment, but on the front of stores and on the front of product if need be. So this is the HRH program. The Prince of Wales popped up last year. He's actually a farmer, a wool farmer. And he was concerned about the money he was getting for his wool. I'm sure it's not his greatest concern, but it was one of his concerns. And he went to Nicholas Coleridge, conveniently for us, who is the editor-in-chief of Condé Nast, which is Vogue, and a bunch of other magazines. And said, listen, well, I think we should do some sort of program in wool. Now, initially it was about farmers in the UK, but he realised very quickly that he had to incorporate some of the other colonies. And of course, we got a call. So we developed, one of the things we brought to the table, of course, is that logo, and said, why don't we stylise it a bit and colour it, and you can use that logo in the campaign for wool. And that had its first year last year. We launched that in October, and we actually grassed over Savile Row. I don't know whether you saw some of the footage of this, but Savile Row is the bespoke tailoring sector of London. We grassed it over. We laid turf for 150 metres, blocked off the street, and ran some sheep in Savile Row, which was a novel event. What marketers would call a stunt. My board don't like me calling it a stunt, but it was an event, if you like. And we do these things. This is about, because we don't have a huge amount of money. We're a $60 million business. That means, you saw the revenue, you saw the expenditure for marketing. That's not a lot of money in the marketing world. So you've got to think of novel ways of actually delivering your message.